All right, let's see what we got. NFP numbers should drop in about 10 seconds or so. We'll react to that as it comes out, see if it causes any volatility this month. Okay, jobs numbers seem to have just dropped. We've got S&P down, dollar up, right? So this is going to suggest possibly some strong jobs data prints. Also why gold would be down here. Dow Jones, Russell, Nas, S&P. That would suggest that you had a good jobs print. That's my guess. Yep, there it is. There it is, guys. Oh my goodness. 256,000 jobs added compared to 164,000 expected. That is a major uptick in economic jobs data for the US. And again, like I was saying, that's good jobs data, but is it good for the stock market? There you've got some issues, because again, if you're talking stocks for a second, now obviously dollar is flying, gold is going to drop on that data, right? The natural reaction here from stocks is, oh no, no more rate cuts, right? If rate cuts are drying up, stock market's going to not love that, right? That's what we were discussing right before the drop of that data. Again, really, let's actually see what kind of damage is that on the stock market. Yeah, I mean, Nas is down 0.7% here. S&P's down 0.6. Bitcoin up 1% on the day, but was up like 2.5. So giving back some gains on that front. You've got gold here down, went from green to red on the day. Same thing with silver, Bitcoin, and we've definitely got some trades to take off of this. I'm going to be looking at a lot of different stuff here today. Let's see what else we've got. So again, gold, silver, back to in the red today. Bitcoin's up 1.3. Dollar index up 0.42%. Again, dollar is ripping off of that. Let's see if it can hold those gains. I mean, that is a huge print though. And pretty much across the board, a hot jobs read for the dollar. Unemployment rate came down to 4.1%. That is strong for USD. NFP report came in higher than expected by 100K. They revised the previous number down from 227K down to 212. Still not a huge number. Really, we've got a net big, strong jobs gain. And again, that is dollar bullish. We said that just before. That makes just good sense, right? If the labor data is coming in solid, then that kind of acts to support the recent rally that we've had in the dollar index and perhaps could take us to new heights. If you're taking a look at currency pairs with this, right, you've got euro dollar selling off, pound dollar taking out those lows once more, the Kiwi dollar, dollar CAD right back towards those highs, Australian dollar taking out the lows. Look at the Australian dollar against the dollar. My goodness. Dollar yen here breaking out to 158.7 here this morning. Again, you've got stocks in the red in response to this. S&P 500. Watch this close, guys. I mean, I like the S&P on the long side, don't get me wrong, but if this can't hold support, then likely we go back and test this area in my view. So if you get a really solid red close today, it's going to be a signal for me to go ahead and stop out of some things and look for, again, lower prices on the indices, because this is going to be problematic to the Fed story. Let's go take a look at yields, and there they go, guys. Look at the 10 and 2-year yield. The 10-year breakout seems to be in. Yeah, I mean, that's somewhat problematic. With that breakout, depending on how this closes today, guys, if this closes like this, it would suggest that the dollar should continue, yields are rising, and interest rates are likely going to get swept off the table a little bit more. So, you've got some big stuff happening with this report. Nas down 1%, S&P down 0.75, Russell's down 1.7. Obviously, Russell hating this scenario. This is not good for small cap stocks. And meanwhile, you've got oil ripping here to fresh highs around the 77 mark. Makes good sense, right? Strong economic prints are going to increase demand for oil. Oil continues to be a great signal from the edge finder. So, we saw that in the top setups page here. By the way, let's see, I closed out for a profit on my dollar Swiss trade. So that move has been awesome. I was long on this one. Shared this inside of the group here just the other day.
Trading is hard, but trading by yourself is even harder. This year is your year to join a trading community. The A1 Trading VIP Discord community is made up of thousands of traders around the world committed to helping you learn and to find better trade setups. Inside of the Discord, you can browse Trader Nick, Frank, and Ivan's trades on all things Forex, stocks, options, and ETFs. You also get exclusive access to Ivan's live coaching webinars, where you can learn from a seasoned professional in the industry and even ask questions during the webinar. We also have chat rooms filled with traders who share their thoughts and analysis daily. It's a space for both veteran and new traders alike to come together over their love of markets. Want to take it a step further? Upgrade to Pulver Alerts, where veteran money manager Chris Pulver shares his daily options and stock positions. All things A1 trading are happening in the VIP Discord. Start your new year off on the right foot and join today.
November, December there, obviously companies were actually hiring. So I don't think it's going to have much impact on the stock market. I think maybe later on, once the market opens, we might see some reversals here and there. Maybe the effect might be on the currency pairs. But once we come from from November, December, also January, mostly we tend to get higher numbers. So I don't think maybe it's a bit surprising.
Yeah, and again, your take there again, I kind of think that these strong jobs numbers, they're not a disaster per se for stocks, because if you think about it, people getting hired, more jobs into the system, it arguably should be a good thing for stock earnings, which should be okay for stock indices. The bigger question, I guess, alongside it is, if we lose the story of Fed rate cuts are still the best guess of where we're going next, that would be the only scenario in which I think stocks would really, really react. I mentioned this a second ago, Kenzo. When we look at the S&P 500, this technical area of support right around 5880 seems to be holding well. And again, you may be onto something with about 40 minutes to go here. The US stock market will open up, and possibly we could see some reversals or continued selling. Of course, we'll have to see how that 9:30 a.m. US Open kicks off. But so do you think that this is kind of a buy the dip opportunity overall, or would you be waiting for bigger dips in order to get involved?
Yeah, I think we have a lot of stuff actually to watch. But I think where we are, I can say it's not really far. Maybe we might still have some sell-offs here and there, but it is still a good area for us to say, yes, those areas can be our lowest areas. For now, remember, we are now on a new year, by the way. So this is going to be the first areas or the lowest areas that we have. So another thing is, I don't think also the companies will be thinking much about the rate or, let's say, inflation. For this month also, I think inflation is still going to go higher. And for those companies, obviously, they did perform very well. They will be reporting their reports. Obviously, they will perform very well because December, people, they were spending a lot. So that might be actually a very good number. So I think maybe if maybe NFP was like way too aggressive, like to a point where it's maybe 300K, that was going to be aggressive. But for now, I think everything is balanced. I don't see any problem at the moment. But I think this might be the lowest areas.
Yeah, I mean, I tend to agree with you. I think this is kind of a dip buying opportunity. I could be, and everybody who's listening, Kenzo and I could be wrong, right? Things could change. Something could come out of the woodworks. But generally speaking, we've got a strong economy in the United States overall right now. I think that continues to do okay, especially with kind of the deregulation stuff that is expected under Trump. There is, inflation concerns with the tariff stuff, but I think that the pros personally, I think the pros outweigh the cons when it comes to stock market stuff specifically. Question for you too, Kenzo. We've had a lot of people in the audience, of course, talking about gold. Everybody loves talking about it. What are your thoughts on gold here, right? So I thought this was so interesting. The dollar is so strong, and yet gold is holding up pretty well. What are your thoughts?
Yeah, I think at the moment gold is also interesting. I think, as you know, gold actually excels very well, especially if things are not going well anywhere in the world, or if maybe let's say we have some geopolitics. At the moment, we still have those things going on. We still have Russia, Ukraine still pushing. We have Israel and the other ones, let's say Middle East. Everything still as last year. But Trump promised to stop all that. So if he can, obviously, I don't think we are going to see a continuation of this uptrend. I think we'll see maybe a reversal, you see. So I think on gold, it's better to wait for Trump. I think maybe in 2 weeks to see if maybe things are still going to change. But for now, we can say yes, the market is still on that bullish move. And it seems like gold did not even care about bigger or stronger numbers from NFP because the focus is actually on geopolitics, you see. But once Trump becomes a president and here and there, if he can actually have a way to stop those wars, I think we are going to see that reversal. I think this effect or this move that we did not really see now from NFP, I think maybe we're going to see it after. We're going to see some serious meltdown. It's possible.
Yeah, and that's the thing. You mentioned it. So like the jobs report here this morning was pretty dang strong. And yet, you know, the dollar's clearly responding. A dollar's up another 0.4% here this morning. You know, that's another winning day so far for gold or for the dollar. And yet, you know, we're not seeing a huge reaction. I mean, gold is positive today. Gold is up the same roughly percentage as the dollar index today, which is pretty exceptional considering the scenario.
So made, what was it, 1.48% today on NFP, not too bad, $175. Currently up now almost 41% in the portfolio, 9% for January. So quite happy with that. Although to be transparent, I am actually currently sat in a bit of a nasty drawdown here on Euro Pound. So it's not all sunshine and rainbows, but you know, I'll take what I've got. So that's it. That's my portfolio update done for today. Hope you're all well. Alan, hello. Shirls, hello. Grids, good to see you. Bernard, Lauder, I'm not sure how to pronounce that, sorry. Hello, James, just want your opinion on this one. Is it a good idea to trade sitting in your bed? I mean, technically you could trade anywhere, I suppose. You know, do what you want to do. I wouldn't say it's a good idea. I need, you know, I've got 3 screens here and it's not enough. I ideally need another 2 because I need news flows. So I have, you know, got Discord, I've got YouTube, got charts. I need another one for, you know, just market updates and stuff. So yeah. Phantom Lee, hello. Alan, 12% gain being added in since 1.121 euro. Amazing stuff. Kevin, Christina. Wow, there's a lot of you guys here today. Why'd you close EU? Phantom, I swear we've discussed this so many times. The reason I closed EU is because I'm not interested in holding long-term positions on euro dollar. I'm interested in getting in, getting out. If I was holding one position on euro dollar, I'd probably have made 5-6% since September. You know, I've like 10x that almost by DCA, and so that's why I'm doing it the way I'm doing it, is to maximize my return. Watching from Kenya, crazy. Mark, hello. Jaylene, good stuff. Okay, right, let's get into the market. So I'll sit here for the next hour. I think I'm on for saying hello to people. Euro dollar obviously had a nice move on NFP. We had really strong numbers for NFP. I'm not sure what the release actually was. Let me just double check. We also had unemployment come out very supportive for the dollar. So yeah, NFP came out at 256, beating expectation. Beating forecast and beating previous. We had unemployment rate come out at 4.1, expected or forecast was 4.2, previous was 4.2. So supportive labor market data, that's very, very good. Obviously the dollar has come and hit 110. As I said, that was my target. I've been saying 110 for quite a while. So yeah, 110's been hit. Next target now is 1112 or 112. So we'll see. So if anyone's wondering about the dollar, all the data in my view is supportive. There might be anomalies here and there in terms of supportive data, but overall I'm more than happy to say that the dollar is pretty set really to continue higher unless Trump comes in and starts playing around. From a technical view, if we go on the quarterly chart, so the 3 months, we've got a very, very clean ascending range here, or ascending channel, I should say. So next stop, in my view, is the previous highs here, which are from 2022, from sort of July, October. So it makes sense really to look, and that's why I'm looking at this 112 level. Obviously, this is the previous highs. So again, just from technicals, that is the sort of target I've got beyond 110. So we'll see if we can break and hold above 110 at the moment. Picked up UJ from 6th of January. Amazing. Dollar yen is an amazing one to be in actually at the moment. Just be careful of 160. Surge. Hi, James. I love scalping high impact news. Has been making way more profit this way with a high win rate, my day trading pattern. Yeah, news trading can be very, very profitable, but it can also be very dangerous. Thing is with NFP, and this is something that I don't really mind, is why I'm quite happy to trade into news, because generally speaking, we'll have the spike. Typically, if you go back and look at NFPs, unemployment, sort of day-to-day releases, not necessarily rate decisions, because that's slightly different, but normally we will have a spike, and then we'll have obviously the move down on the spike, and then a correction eventually. This correction might take a while, but eventually normally we do see some sort of pullback into the pre-news price. So you can always, try to get out relatively unscathed if it doesn't go your way. So that's why I'm quite happy to trade news. I don't like news trading, but I do like their outcome. Fair enough. Gold, we can have a look at gold. Let's see. I've really not been paying attention to gold recently, actually, just because it's been such bad price action, or so uninteresting to look at. But it seems like we are moving to the upside now. Finally, so we broke out of this range temporarily and then came back in, and we kind of got re-trapped within this zone, if you will. And now we've finally, again, broken out. So now maybe the time to start looking to go long. We've established an upside trend here on the H4. Obviously, we've just had NFP, so probably now isn't the best time to go in. But we've got the RSI overbought, so signals we might be able to get some sort of retest or some sort of pullback into the zone before we continue higher. But on the other side of that, as I've been saying, there isn't really anything that makes me want to buy gold. There's no strong economic or geopolitical situations going on right now. News trading is obviously only for experienced traders. Yeah, I would say so, actually. News trading can be detrimental. Hi, James. Selling since 1.3 pound dollar. How far are we going to continue the downside? It's difficult to say how long we're going to continue down, because obviously data could change very, very quickly. However, what we can do is look at the basics, which are the technicals. So these are the levels I've already got marked up of interest, really. So 1.2 is the first level I would be looking to start booking some profits, maybe scaling in if we see a break of 1.2. But yeah, 1.2 has been mentioned quite a lot within the institutional side of things, within bank reports and research papers. So 1.2. Then beyond that, we've got this 1.18, which is just the bottom of this low. And then obviously from there, you would continue to basically just look at where the next daily supports are, and just be very vigilant as well on what's the news at. How's the pound doing? How's the US dollar doing? What's Trump doing? All those types of things, and keep up with what's driving the market. USD CAD. I'm actually in dollar Swiss as well, but yeah, USD CAD, we can take a look. Bit late to dollar Swiss, unfortunately. I think Nick got there a bit before me, but that's fine. So dollar CAD, I would say, is pretty much set to go and retest the 2020 and the 2016 highs. So we've got the high here. Obviously, again, this was from 2020, and then we've got the one here from 2016. So we didn't quite make the 4-year cycle. So obviously 4 years, so we've got 2016, 2020, and then we could have had 2024, but we didn't quite get there. But I would say it's still within range. I'd say that's probably the more likely place we're going to go to. Beyond that level, which I think is possible, again, depending on how the dollar's how the fundamentals for the dollar continue to develop, which so far so good, continue to the upside. However, saying that, there isn't really, in fact, I don't think, well, there is some structure, you know, right back in 2002, but there's not really much to go from in terms of targets. So it would really be a case of, you know, if you went long on the retest, you would really just have to go and sort of trail stops underneath the current, or sorry, the previous lows, really. Also, guys, I got some branding on the A1 show. Can you believe it? Look at that. Check out Elite Traders. How long is a piece of string? Yeah, Sean, that's a good answer, actually.
S&P's down 1.6%. Q's down almost 2%. Dow is down 1.3%. Russell down over 2%. Mag 7 is down. Volatility is up. Dollar slightly stronger. US 10 yield slightly stronger. Oil up to $76. Oh boy. Oh boy. So a couple things to take in for today. Here's a recap of the non-farm numbers. Came in 256 over forecast of 164, but the revision was negative from 227 down to 212. A lesser, so 4.2 came in 4.1 with the unemployment rate. Average hourly earnings came in 0.3. CAD numbers came in pretty positive. Let me take a look at the currency market here in just a moment. But the big thing that I'm watching is this 10 a.m. news for the consumer sentiment, lesser, and the inflation expectations higher by quite a bit, actually. So here is where I think the market is thinking about stuff. Right there. So the 1-year inflation expectations just went from a 2.8 print from the previous to 3.3. And the 5-year inflation expectation went from a 3% to a 3.3. Both higher. Next week we have CPI and we have PPI. Again, we'll see what the true data is. I think James was talking about the probabilities of rate hikes. I don't see it on the watch tool at all, but if we go to probabilities, what the market is looking at, and this was weird. I was in a session earlier this morning. The June FOMC rate decision was actually paused and not looking for a hike, or a cut rather. So right now the probability is still, it's more of a coin flip. You can see here that if you go to June, so I'm looking at this number right here. So June, we have a 42.7% chance that there's going to be a 25 basis points cut, and we have a 41.4% chance that there is no cut. So I think we could say that right now this is a coin flip. This is a 50-50 coin flip, and it's technically like 42 and 42. So it'll change as we get closer to it, but I think it is pretty safe to say that right now there will be no cut at all until, if at the earliest, probably June. And next week's data is going to be really important to see, and I don't know if they're going to fudge the numbers or not, but I don't think we have a forecast for next week. If we go to, I think Tuesday is PPI. Okay, so we do have forecast for PPI. I want to see what it looks like from the economic calendar on Bloomberg as well. So Tuesday, we go to next week. Let me get some comments here. Okay, David, I'm not with MTI, man. I'm not with MTI. I'm with Prosperity Pub and with A1 Trading and my own stuff. All right, let's go next week. If you'd like to, so if anybody wants to join, I've got a Telegram channel, I've got a Discord channel. If you want to, follow me, see what I'm doing, it's all right there. So let me share. I'll just do a one day link for my Discord. Chris Pulver Trading invite. Let me do a 1 day link here. So for 1 day, Chris Pulver Trading Discord. Nope. Don't post that. All right, my bad. I didn't mean to post that. There. That is my Discord. So that is where in my channels I've got free group chat, any assets, Forex, stocks, options, futures, anytime I go live on YouTube, a blog that I post typically every week or more, anything on Twitter, any analysis is interesting, private instruction, affiliate discounts like your Edge Finder, some software that I use that helps me trade, and real-time news, all that stuff. So I keep my channel pretty clean. I don't like a bunch of like sub-threads. I don't send friend requests. I don't send direct messages unless you direct message me first, but you can find me every day in the free group chat. Okay, so anyway, easy way to follow me. All right, let's go to next week. Let's go to next week. What are you doing there? There we go. I'll just go the whole week. There. Apply. All right, let's go to Tuesday. So Tuesday, 8:30, we have CPI year over year. Okay, interesting. Is that right? CPI year over year previous print was 3.4. Yeah. That's PPI. Okay. So is that right? Previous print was 3.4. They're forecasting 3.2. So an improvement, maybe. PPI year over year, 3%, 3%, month over month, 0.4 to 0.3. So the forecast, according to next week's Bloomberg Economic Calendar, is that there's going to be a slight improvement from the previous print in producer price index. We shall see. Wednesday is probably like the big headline that everyone's looking at. Here is your there's CPI coming out of UK next week as well. And let's get into the 8:30 news for the US. And I don't have anything forecasted for CPI. So I've got month over month forecasted for a negative print. Year over year, there's no forecast. Core CPI, there's no forecast. CPI month over month, 0.3, 0.3. CPI year over year, this is going to be an important thing to watch. These two right here. Watch this and this. Okay, you can get this. You'll see this on the Edge Finder next week as well. But is the inflation news looking better? We don't know. We're going to find out next week. Okay. So for today's price action, we're right back into the tests of the levels that I said you got to watch for it, right? If we have support and resistance zones, we have support from PCE. This was the FOMC low right here. 2 days later, we had that gap lower that started the holiday rally. So we have the PCE low right here. We had the retest of that during the holidays. Today, we're retesting that through non-farm. Now, we did gap lower. We've already had like a 100-point day on the S&P. That's a pretty decent amount, right? S&P's down 83 points. We had like a high to low so far. Here's my SPX. This black line is that support line that I was talking about. You know, I don't think that we come back and fill today's gap. I think that's a long shot. There's like a 20% chance we fill today's gap. So that's like unlikely to happen. But I would say that from this close yesterday to open today and that flush down, you know, getting a pullback here and settling in, like closing above 5,800 would be, you know, the market just kind of defending a support zone, right? Testing, but we're coming right back down to the daily 100 moving average. So if we're testing and there's a little bit of buying there, or the market's not quite ready to see that the damage is being done yet fully. I mean, if today's candle were to close not only below the PCE low, but below the holiday low and also below this 100, well, then I would be looking at this as just path of least resistance is now to the downside. You know, unless there was like a big snapback candle, getting some additional trades to close out. Okay, I'd said a trade close out for profit. Let me find that, track that. That was another trade on the SPY that closed out today.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.